Hello, everyone. So today I'm with my colleague, David. In Orbex, we are a company in this market for more than 15 years, or sorry, almost 15 years, in a clear vision in this market to change the financial market image for most of people. So today we just made a quick combination about the most important tools must be in our mind once we enter this market. So at the beginning, we will start with the analysis with David. He's a market strategist for more than 20 years. And after that, we will speak about the risk management and psychology. So please, David, you can go now. Thank you.
Thank you for that introduction, Huthayfa. So over the course of this two-day event, you'll probably hear a lot about the upcoming US presidential election, how to trade it, what the good points are for a Trump victory, what good points are for a Harris victory. What I just want to take you through is what will happen under Donald Trump. Now, just for the first time in a while, we've got a president that's had a 4-year break that wants to try and have a second term. And we've got an acting president at the moment in Joe Biden that will not run for a second term. So it's quite a good event because it could shake the markets quite significantly. So we've seen before with Donald Trump, we've had tax cuts, deregulation, fiscal spending. The last point is the most interesting because now that the Fed have started to cut interest rates, there could be a hesitancy on the Fed going more aggressive into next year if Donald Trump does get in office and he does start spending, because obviously he wants to really input a lot of cash into the American economy to avoid a recession, to get this soft landing. Hopefully that will happen for next year. So the Fed could take a different turn in aggressively cutting rates, as they did do with the 75 basis point increases that they were doing when the pandemic was in full flow a couple of years ago. So bearing in mind, I've just skipped a slide a bit quick because on my last slide, we had the Trump trade, and the Trump trade is just a collection of investor opinions based on what we just went through. So is there a Harris trade? Well, you know, we've got potential increases in corporate tax, pretty much like we have been seeing for the last 4 years under a Democratic leadership in America. Enhanced prospects for clean energy, which means that they're going to really push the green rhetoric, which could hurt some oil companies as well, such as ExxonMobil, Chevron, the big players in America, which have been seeing really significant record profits for the last few years. So this could be a bit of a haphazard look into the next 4 years, depending on who wins. So let's just take a quick look at what markets specifically can be affected. So I don't want to take you through all the markets. As I said, you'll probably hear a lot over this two-day event on how to trade the presidential election. I just want to look at the S&P first of all, because in Trump's first term, we saw the S&P move over 50% in its earnings, apart from when we saw a dip in the pandemic when it happened in the beginning of 2020. But since then, obviously, the last 4 years, we've had record highs on the S&P, the Dow, and the NASDAQ. So could this keep on going? Could we still be having record highs on these indices? We'll have to wait and see, obviously. But under Donald Trump, you know, we're looking at techs, financials, and industrials, because he introduced the Tax Cuts and Jobs Act in 2017, which was a big winner for tech companies. So we're probably looking like these tech-heavy indices will keep on pushing under Trump. However, they haven't really slowed down under Joe Biden, so most probably we'll have another look at that if Kamala Harris is in charge. So just a brief look at the S&P from Donald Trump's first term at the beginning of 2017. The only time we got a big major correction, we had a small one before that, but when the pandemic did begin, we had this major correction. But what's most interestingly, before he left office, the S&P was managed to retrace over 100% from the correction. So it looks like the indices do favor Donald Trump. So before I hand it back over to Huthayfa, I just want to look at one more market, which is Bitcoin, which we saw at the beginning of 2017, its first ever rally, if you remember. If you're a Bitcoin trader, you'll probably notice that we went from $700 to $20,000, and that was under his first term. So Donald Trump is seen as more crypto-friendly, especially as he has said he will accept donations in crypto. He's seen as a more pro-crypto candidate, and he did say he wanted crypto to be mined, minted, and made in the USA. The Democratic Party remains a little bit less supported. We've got Kamala Harris previously signaling a desire to reset communications and the relationship with the industry. But however, the most important factor is with over 50 million Americans holding Bitcoin and crypto, it is a very significant voting bloc that both parties will be looking into. So before I hand it over to Huthayfa, just my last slide here, Harris or Trump, well, we are expecting more funds to be injected into the economy under Donald Trump, which could be a big player for tech companies to continue rallying. However, it could be a fact of more of the same. We've seen the S&P, NASDAQ and the Dow, like I said, hit record after record recently. So will we see the stock markets and even the Forex market start shaking up? And obviously Bitcoin, will we see that magical $100,000 mark by the end of, well, this year, possibly next year? We'll have to wait and see. So I'll hand it back over to Huthayfa for now, and thank you for your attention.
Quick question, David. So you feel that you have studied that there is a positive correlation between Bitcoin and Trump winning the elections?
Well, if history is anything to go by, in 2017, like I said, we saw the first ever big rally on Bitcoin up to 20,000. So, you know, with the Republican Party favoring crypto more than the Democratic Party, we could see this huge rally again. But we're kind of stuck at a bit of a resistance at the moment with Bitcoin. So it'd be interesting if we break that resistance to keep on pushing.
Interesting. Thank you very much, David.
Thank you.
Hello, everyone. So my name is Huthayfa Abbass. I'm Research and Development Manager with Orbex. Let me tell you my background before I start to speak about the psychology and risk management. And then we will go to what to expect from this market. Okay? So I started as a sales in Orbex. And before we enter, Orbex has a slogan, serving traders responsibly. So we must go through a very hard training. Then we will have an exam in order to serve the clients. So after that, we had a big contract with a very strong analyst. From my side, I see him as one of the strongest in the world, to be honest. And in 1 year, I was following up with my clients. I was calling them most of the time because I wasn't only interested to be a sales. I wanted also to be a trader. So I was calling them, and most of the time, after they were following this analyst for 1 year, he had an accuracy rate above 90%, this is very hard to get. Like usually he's getting 60%. And now we will speak about that, accuracy, like 60% of his trades are profitable. Sometimes they are 40%, but he will be profitable because the loss of outcome the winning trades. So I was calling them after he got the 90% accuracy winning, and I was calling my clients. And most of them are losing money. So I was shocked. Why are they losing money while the success rate was so high? And later, when I get their answers, I was putting a feedback. Most of their losses wasn't because of technical analysis or fundamental analysis. Most of it was about the psychology. I got mad. I entered the market before I should do, which is, or I got greedy on the market. Then I started to understand that the most important part in the trading profession is not technical or fundamental analysis. Like everyone who starts trading, the first thing they will start to learn is technical and fundamental analysis, as what I did. But at the end, I didn't see the success is there. So it's a full combination. Then I was lucky to participate in a big study for one of big companies, trading companies in the world, which has instruments like Forex trading, commodities, stocks with leverage and without leverage. And we got a very, to be honest, interesting outcomes of that. Like one of these, that most of the traders lose their account in one trade. What we mean by one trade? Like as an example, they will see the gold, that they are going long on gold. And while they are losing, they will take more trades while they are losing more, because they believe that the market will follow them. So most of the traders are losing their profit or account in one trade. We call it the destroying trade. So most of fund managers say, don't get married to your position. After that, when I saw the numbers that most of the traders are losing because of psychology, not not that technical or fundamental analysis. So I decided to go more deep on this profession and science. And after that, I found the book that has changed my whole life, which I got it by my brother, which he's a very good trader. It's called The Trading in the Zone. For a writer, his name is Mark Douglas, which he's a trader and he's a psychiatric. So this book literally has changed my results and mind on trading. So today we don't have a lot of time, to be honest, to speak about his whole book or how to treat this market. But let's take an example of what we can expect from the market and why most of people doesn't even know if the technical analysis which they are following is working or not. Most of people will start with a technical analysis strategies, but no one will finish to get sure that it's working or not, because they will face the emotions while they are trading. So at the beginning, let us understand what is these emotions and how it affects our trades. First of all, we have the greed. So in this market, we are agreed on win and we are agreed on loss. So if we have a profitable trade, we need to win more. And this is the least, let's say, scenario happens. And we have the greed of loss. We don't want to close the trade while it's losing. And this is what most of traders do. And it's more than 90%, I can assure you. Once their trade is losing, they don't want to close it. They don't want to accept the loss. So we are greedy on one and greedy while we are losing. We have the behavioral biases, which is this one, most of the professional traders got it. And of course, the individuals. While they are sitting down, let's say I tell my friend the gold is going up. So the gold is going down. I'm telling him, no, now it will go up. He says, okay. Then I will stuck with my plan just because I don't want to show that I was wrong because of what I said. Then we have the fear. What is the fear? If you lose 3 or 4 times in a row, you will be scared to enter the 5th trade. And there is no problem to lose that. Now we will understand in a while that you can lose 20 trades in a row and maybe one trade will get you back in the row. So, fear while you are afraid to enter the market, or let's say you have a take profit, you have set a take profit and a stop loss. So the market brought you, let's say as an example, your take profit target was $100. It get you only $70, so you close because you are afraid that it will not hit your target. And that's a big mistake, because after it hit the target, there is something called opportunity cost. So I lost $30 because I was afraid. We have the overconfidence. 90% of traders loses most of their accounts after 4 trades winning in a row. So they get the overconfidence and say, I know where the market is going, why I should take a small risk, let's go. Do it or die. So then we have the addiction and over trading, which is this one. It has a physical or chemical and psychological side. While we are trading, there is a lot of hormones are being produced by our body, like adrenaline, serotonin, cortisol. We got addicted to that feeling while we are sitting on the market to see where the market is going. And there is the normal addiction. It's like cigarettes. There is a nicotine addiction, and there is that I'm used to smoke. There is the other one, which is FOMO, fear of missing out. So once we have the trades are going on, we are afraid to lose the opportunity on this market. So we start to enter the market before my price comes. Like let's say I'm following an analyst telling me to buy after $10 on gold, not here. So I will go enter the trade before I should do, because I'm afraid to lose the opportunity. But that at the end, it will make me lose. There are the revenge trading, After I lose, I will deposit more money and I will lose them all. So, today I can't cover all this subject, but I want to tell you my profession in this field is psychology and risk management. I work with Orbex and I work as a consultant for many hedge funds. So if anyone is interested, let's start with our booth. You can visit us there, Orbex company. And after that, we have an office in Dubai. We will have always workshops. We will have traders community where all professional traders will be trading together. And we will have analysis sessions. Everyone is welcome. Thank you very much.